Not long ago, I read a biography on Warren Buffett. And I know as I was reading this, so I'm not a stocks guy. I've messed around with the stock market a little bit, did not do very well. But as I read this book, I went, wait a second. Warren Buffett isn't a stock guy either. Warren Buffett is not involved in the stock market. Buffett is involved in the business of buying businesses and then using the cash flow from those businesses to buy more businesses. That's what his business is. So what I want to do this morning, afternoon, evening, it's going to arrive to you in the morning, but I'm recording it the night before. What I want to do is break this up a little bit and share kind of what I've learned from Warren Buffett's secrets to his success, and then transfer those over to real estate, because that's the area that I'm passionate about. That's what the area that most of the people that watch these videos or involved with me in any way, shape, or form are interested in. Okay. So number one, what does Warren Buffett do? And what has he done? Well, what Warren Buffett does is, again, he never bought stocks. What he bought shares of a company. I'm not saying he didn't buy stocks of a company, but he didn't buy stocks. He bought portions of a company, and he only bought companies that paid him dividends. This is extremely important. So he had cash flow positive businesses that were undervalued, and he bought those businesses. He was buying businesses, not simply stocks. This is how he evaluated businesses. He looked at it and said, wait a second, this business, in any valuation, the assets in this business and the cash flow coming from this business make this more valuable than what it's actually being sold for right now. So he kind of went, wait a second, if I can build this business and then build all these assets, and it's more expensive to do that than to buy this business right now, I'll do that. So again, he was getting a very good deal on these businesses. He was always looking for great deals. These deals come harder and harder in the world of business. They're still fairly easy in real estate if you know what you're doing. So he was buying a business that was undervalued. Secondly, it had to be cash flow positive. It had to spit out money. It paid dividends at the end of every quarter, usually every quarter. It paid him money. So he wasn't buying stocks and hoping that the stocks went up in value. He was buying an undervalued company that paid him money on a consistent basis, and then as people realized over the long term, not over a year, not over 6 months, not over 3 years, over the course of 20, 30, 40, 50, 60 years, the value of that company would be realized and the stock had a good chance of going up, okay? The shares in that company. Now, he would buy a company, and he loved buying the entire company, or at least the controlling shares in the company. So he was the decision maker. And then he bought a second company. So Berkshire Hathaway, that was a manufacturing company. Okay, it worked with it was with textiles of some kind. Okay, and it was actually not a very good company, but he bought that, and then he bought a second company with the money that was coming out of the first. He bought a second company, and with the second company and the first company, the money that was coming out of both of those, he didn't just pad his pockets. You know, he doesn't live high on the hog for being worth, I don't know, 80, 90, whatever $1 million he's worth, or $1 billion, sorry. He doesn't spend that money on himself. He uses that money to buy another company and another company and another company. And it's kind of like the Russian doll idea of within a company is another company, and within that is another company. He's bought company after company after company, and all of those companies spit out money on a consistent basis. And then he uses more and more and more of that money to invest in more companies. And this is what, I remember reading this and going, this is what we do in real estate. This is what a great investor does. A great real estate investor does not go, ooh, I think that this market is going to go up by 50% in the next 3 years, and so I'm going to buy it. Doesn't matter what the price is, I'm just going to buy it because it's going to go up in value. That's not what investors do. What real estate investors do is say, wait a second, what is the market value for this, and how can I buy it for less? Let's look for great deals where even just buying it, I'm making a bunch of money. And then secondly, the investor says, the second criteria is this, the property must pay me money on a consistent basis. If it's not paying me money on a consistent basis, it's not going to be a great deal. Now, yes, there are people who land bank and do other things where it's not cash flow positive. That's a very advanced strategy. We're talking about the regular investor that needs to think in a certain way, okay? So first, it was a good deal. Secondly, it's spitting out money. And then thirdly, instead of using that money to just live the high life and buy private jets today, instead, I'm using that money to buy a second property, and then the money from the first two properties to buy a third property and a fourth property and a fifth property. And for when all of those properties are cash flowing, now when I stop, the world explodes with money. Now legitimately, it's kind of like an ATM. It's not because we are taking money from somebody, it's legitimate business, but that's the way business is built in real estate as well. I believe those are fundamental concepts that we all need to understand. Now, is that everything you need to know about real estate? No. Are those the only best ideas about real estate? No. The cool thing about real estate are there's so many ways to make money. And maybe next week what I'll talk about is how real estate is a hedge against inflation. And even the debt of real estate, you win if there's inflation, significant inflation. Maybe I'll talk about that next week. But for this week, just think about that. Think about the way an investor thinks, like Warren Buffett, how he thinks about real estate versus maybe the average person, what they think about investing when they hope and pray. It's called the hope and pray investing method, where you buy something, and even though it doesn't give you any money, you hope and pray it goes up. And then that's how you make money. And this is why so many people lose their money in real estate crashes, because they don't have that cash flow positive real estate that has a net income. After all expenses are paid, it pays you over and over and over, month after month after month. And if you can put aside your desire to spend the money immediately, and you can use that money to buy a second property or pay down the mortgage or do whatever your specific strategy is, there will be amazing things that happen in the future for you. Enjoy your week.